Everyone, my name is Manish Sethi. I hope you all are staying healthy. Today we are going to talk about balanced budget multiplier, tax multiplier and government expenditure multiplier. First of all, we are going to talk about balanced budget multiplier. Balanced budget multiplier is a situation in which government increase its expenditure and taxes in such a rate so that it can keep its budget in balance. Balanced budget multiplier is a situation in which government increase its expenditure and taxes in such a rate so that it can keep its budget in balance. Or we can say that in balanced budget multiplier, government changes its expenditure and taxes in such a way so that it can keep its budget in balance. And balanced budget multiplier also show effect of taxes and expenditure on aggregate output or on national income. As we know, government do some expenditure for welfare of society, plus government impose some taxes also. And in balanced budget multiplier, government impose taxes and do expenditure in such a way so that its budget remain in balance. For example, government increased its expenditure from 500 to 700. So in this year, government changed its expenditure at the rate of 200 rupees, and government increased its taxes from 700 to 900. So in this year, government changes its taxes expenditure at the rate of 200. So we can say that in this year, government expenditure is equal to government income. As we know, taxes are income of government. When government expenditure is equal to government income, it will be called balanced budget. So here we see government increased its expenditure and taxes in such a way so that its budget remain in balance, and it will be called balanced budget multiplier when government changes its expenditure and taxes in such a way so that its budget remain in balance. So for calculating a balanced budget multiplier, we need two things: tax multiplier and government expenditure multiplier, because balanced budget multiplier is made up of these two things. First of all, with the help of this equation, we will calculate tax multiplier and government expenditure multiplier. As we know, in closed economy, Y is equal to C plus I plus G. Here Y is our national income, C is consumption expenditure, I is investment expenditure, G is government expenditure. As we know, C is equal to A plus B YD. A is autonomous consumption, B is the marginal propensity to consume, and YD is disposable income. And we can calculate disposable income when we minus taxes from income. Here Y is income and T is taxes. So we can say that YD is equal to Y minus T. In this equation, we will fill value of YD, then our equation will become like this: C equal to A plus B Y minus T, or we can say that C equal to A plus BY minus BT. So in this equation, we will put a value of C. Now our equation will become like this: Y equal to A plus BY minus BT plus I plus G. We will bring BY in this side and we will take Y as a common. Then our equation will become like this: Y equal to A minus BT plus I plus G over 1 minus B. So our final equation is this. With the help of this equation, we will find out value of tax multiplier. First of all, what is tax multiplier? Tax multiplier basically tells us how much income of economy change when taxes are changed in economy. Tax multiplier basically tells us how much income of economy change when taxes are changed in economy. Formula of calculating tax multiplier is KT equal to delta Y over delta T. Here KT is tax multiplier, delta Y is change in income, delta T is a change in taxes. And this formula basically tells us how much income of economy change when taxes change in economy. Now we will find out value of tax multiplier from this equation. In order to find out value of tax multiplier from this equation, we will differentiate this equation with respect to T. As we know, T represent here taxes. When we differentiate this equation with respect to T, we will get this: minus B over 1 minus B. As we know, B is equal to MPC, marginal propensity to consume. That's why we can also write this equation as minus MPC over 1 minus MPC. This will be called value of tax multiplier. Now from this equation we will calculate a value of government expenditure multiplier. Government expenditure multiplier basically tell us how much income of economy change when government expenditure change in economy. And formula of calculating government expenditure is kg equal to delta y over delta g. Here kg is a government expenditure multiplier, delta y is a change in income, and delta g is change in government expenditure. In order to find out value of government expenditure multiplier, we will differentiate this equation with respect to g. As we know, g represent government expenditure. So when we differentiate this equation with respect to g, we will get this 1 over 1 minus b. As we know, b is equal to MPC. That's why we can also write this equation 1 over 1 minus MPC. This will be called value of government expenditure multiplier. Now we will calculate value of balanced budget multiplier. Balanced budget multiplier is made up of two things: government expenditure multiplier plus tax multiplier. Here BBM represent balanced budget multiplier. This is equal to government expenditure multiplier plus tax multiplier. This is value of government expenditure multiplier and this is value of tax multiplier. When we solve this equation, it will become equal to 1. So we can say the value of balanced budget multiplier will always remain equal to 1. What does this mean? That means when expenditure and taxes are changed with the same rate, the national income of economy will also change with the same rate. Now with the help of this diagram, we will understand balanced budget multiplier. In this diagram, on x-axis we have income and y-axis we have consumption, investment and government expenditure. This OY is our income line, C1, C2 and C3 are consumption lines. D is initial equilibrium point. At this equilibrium point, our income is OA. Now suppose government impose tax is equal to DE. DE is change in taxes. As government impose taxes, income reduce, consumption will also reduce. That's why consumption curve will shift backward from C1 to C2. In case of balanced budget multiplier, government equally increase expenditure as it impose taxes. That's why government will increase expenditure equal to EF. EF will be called change in government expenditure, that is equal to DE, which is called change in taxes. And as government increase expenditure, income of economy increase. As a result, our consumption curve shift forward from C1 to C3. Because of this, you can see our income increase from OY to OB. This AB will be called change in income. Here you can see a change in government expenditure is EF, change in taxes is DE and change in income is AB. In diagram you can also see DE is change in taxes, EF is change in government expenditure, AB is equal to change in income. And change in government expenditure is equal to change in taxes and change in income also. What does this mean? This means when government expenditure and taxes are increased at the same rate, then income of economy will also change at same rate. So this is all about balanced budget multiplier, tax multiplier and government expenditure multiplier. I think you got it and thank you so much for watching this video. Bye. Take care.